Hi everyone. I'm here with a good friend. His name is Nadav from CapEc. Today's topic, we're going to talk about how funding can ease a lot of inventory issues, especially with this year. There's a lot of new changes like logistics fees. Amazon increased a ton of fees, and Q4 is coming up. So it's a great topic to discuss where if you're a little bit tight on cash and you need to have more money to fund your business to have a successful Q4, and we'll talk about that. So it's great to meet you, Nadav. It's great to see you. Tell me a little bit about yourself, about your background.
Hi, Ephraim. Thanks for having me. So personally, yeah, I've been selling for over 10 years. I've built multiple brands, sold a couple, bought a couple, 4 brands today, all 7 figures. Very educated in the space. We started CapEc 3 years ago because we felt and saw the need for the correct type of funding for e-com sellers that is a little different than the standard financial solutions that are out there. That's what I'm here for, and I hope we can help sellers really grow their business because obviously any business on Amazon needs capital, needs inventory. That's basically what it's built on. 80%, 90% of your capital is always on inventory, and we're here to help in that.
Right. I mean, things have definitely changed. I started selling in 2011 when $10,000 bought you a lot of product and was able to really accelerate you to have a successful business. But in 2024, this is completely not the case. So
Right.
how can be securing funding or line of credit help an Amazon seller manage the inventory levels more effectively, especially now with the new Amazon fees where it's got more expensive across the board to be a seller?
So first of all, as you said, I think the most important thing for a seller is to understand its expenses, its profits, its everything. But moreover than that is understanding the cash flow of those expenses, because that's where most sellers fall behind, not understanding really when and exactly they're going to get money back and when they have to pay money for their expenses. Now, most of our expenses are inventory, and when we're private label sellers, we're creating inventory manufacturing usually abroad. So our cash flow is very unique and very different than regular wholesale and distribution because we usually have a deposit. We wait a month or two till the product's ready. We have to pay the difference. Then we have to pay the shipping. And only then it goes and ships into Amazon and starts selling. Hopefully you bought product for 4 to 6 months. And so your entire ROI period is around 9 months from when you put your deposit until you sold off that batch of inventory. So it's very, very important to understand the real cash flow of when you need to disperse your funds and when you're going to get money back from there. Because in that situation, if you take standard bank financing or even most of the solutions out there, revenue financing, they're looking at your online sales, so they're giving you money and they're starting to take it back already from next month. But if you use that money to buy it, to put a deposit on inventory, by the time you have to pay your next payment and your shipping, half that money you've already had to pay it back. So it didn't really add anything. It just postponed your payments, and in that way, it even sometimes harmed your cash flow because you already committed to purchases that you don't even have enough cash flow to pay for now. So first of all, the most important thing is understanding your cash flow and using the right financing that fits exactly your cash flow and your ROI. Because once your financing is efficient, then it's also utilized in the best way. The fees in most cases are lower and you have steady cash flow, which enables you to grow your business. Now, using financing in general is every business, anyone who's business savvy. I mean, even the larger companies in the world, whether it's Google or Microsoft, they don't go to the public market for nothing. They go to get financing. You need financing to grow, especially in the Amazon space. It's so dynamic. You can grow your business times 3, times 4, times 10 in 1 year. And at best, you might be doubling your money every year or from your profits. So if you're only planning on using your existing profits to grow, you're not going to grow to your potential and it's going to be very hard. So obviously you want to try to find a finance partner to enable that growth. Luckily, as private label sellers, our profit margins, because we are manufacturing and selling directly to consumer, are extremely high. It's not like wholesale where you're making 15 to 20% on the deal. You're usually making between 70 to 100% on the deal. But the ROI period is much longer. It can
Right.
take 9 months. And you have multiple purchases because you've purchased one, you sent it in. Now you already have to make a new one, and sometimes a third one before you even sold the first one. So you always need that cash flow and that capital to grow. So in order to do that, if you find the right finance partner that's able to give you that amount, then you can really grow your business to its total potential. And so that's why using external financing is number one thing for any business that's growing. I always recommend it. It also gives you help with risk management. You don't want everything on you. I mean, at the end of the day, when you look at go to a finance partner and he's willing to give you financing, for one, he's giving you some kind of stamp that you're doing the right thing, you're working well because he approved you. He's not going to give you money if he believes you won't be able to pay it back, right? And when it comes to risk, if something, God forbid, happens, then you have a partner that's either going to help you out or some of the negativity also falls on him. So you don't want to put your mortgage on your house. You don't want to risk your own life, everything in your business, because there are problems, things happen. So if you can risk management some of that risk into partners, just like you would take an equity partner, but using external financing, you don't have to give equity, you just give the product. At least from our solution, we built it in a way so there's no personal guarantees. We don't take your house. We don't ask for credit checks. We're partnering on that inventory. So our only collateral is the inventory. So if anything happens, we're going to help you out to sell that inventory because that's the only way we're going to make our money back. So if you
Right.
partner with a group like us, then great. You know that we're a partner that'll help you to succeed. If you partner with a bank or anyone else that takes a personal guarantee, they don't really care if the business is successful or not because they can always take your home or your car or anything you own. So that's also another reason of choosing the right finance partner.
Right. It's super interesting what you're saying, super educational, because I'm in the industry for what, 13 years now. And I've watched some friends, unfortunately, lose their houses because they took out a home equity loan or line of credit against their assets. And things sometimes happen, like you said. And I have two friends that unfortunately, like, they had to like take a smaller car, get rid of their expensive car, get rid of their house, start renting again, all that. So it's really unfortunate. It's really educational to look at it with that lens that you have to take risks, but at the same time, you can take healthy risks versus really destroying yourself. So,
Yeah.
what are some like common mistakes? I mean, we're in Q3 right now. Most sellers are probably place their POs overseas where they're manufacturing their product. Some of them are starting to trickle in slowly. Some people are putting in their POs right now for Q4. So what are some common mistakes that you've seen sellers made with their cash flow for to be able to manage their Q4? Like what's the proper way and what's the mistakes you've
So,
seen?
so Q4 is a very hard time for a seller to manage its cash flow because suddenly he has these extreme expenses and he's only going to get it back in a few months. And if any business usually has some kind of steady backup or steady amounts, you don't want to have your money sitting all year just for that peak in December or November. So using us even for Q4 is extremely ideal because you can just keep your inventory level at your 40% that you're used to, use your own capital for that. And now that you need that times two, times three, you come to us, we'll finance it, and you don't have to worry about bringing more money into your business just for those few months. And obviously, those few months in most of the businesses are the most profitable and the most income months. So, working with us, you might make a percent or two less on your profits, but it doesn't matter because you're able to do so much more in revenue and in sales. In general, by the way, I always recommend as you're growing to use a finance partner because they can allow you almost unstoppable growth and unlimited inventory so you never run out, and that allows you to grow. You don't have to look at your small, just like when you're launching a product, you don't really imagine to be profitable on the first batch or two, right? I
Right.
hope to sell the product, start getting revenue, start
Exactly.
creating reviews and creating assets on Amazon. So on the same way, after that, still, as long as you're growing, if you're making a few percent more, a few percent less, that's not what matters. It's a matter to always get that full potential, that full growth, being strong, being big, being able to sell as much as possible. Anytime you make sales, obviously you're creating more assets in Amazon, more organic, more reviews. And the worst thing that we all know can happen is if you run out of inventory. Basically, you reach that great place and then boom,
Right.
you're not get knocked back down. So you want to be able to always have at least 10 to 20% extra working. So planning ahead, having that capital, that finance, knowing your cash flow for Q4. Most sellers buy extra for Q4 because they know, worst case, we'll sell it off a few months later. I used to do the same thing. When we could store inventory in Amazon for a year, then we don't buy everything in September and wait till,
Whatever it
next
sells
time.
out.
Exactly. But on the other hand, also, especially today, what you were saying about inventory costs, storage costs, all that, you do have to be very efficient. Check your competitors, check how much they go up every Q4, find your positioning where you are compared to them, so you can really try at least to estimate the real amount you're going to sell in Q4, because also any amounts you buy over will cost a fortune to store. I mean, some products go down 10, 90. Like I have a toy brand, in Q4, yeah, it bursts, but then it can go down to
Go down.
nothing, and you can be waiting even till next Q4 to get rid of that inventory. And the cost of holding inventory today on Amazon or 3PL or whatever is obviously something you don't want to happen.
Right.
And it's capital that's sitting on inventory and not working. So in some ways, on the one hand, you want to be able to bring as much as possible, but you have to be very realistic about it. You don't want to
Over leverage.
exactly.
I've seen Amazon used to have these periods where if you wanted to do a removal order, for example, right, and hold it in a 3PL where it's probably 70% cheaper than Amazon, still
Right.
money, but now there's no such a thing. They became so expensive on removal orders where for some people, I remember I spoke to one seller and they told me like, it doesn't make any sense for me to just even remove it.
Right.
Like pay the I'm just gonna destroy it or like donate it in something and that's it. So it's definitely a big overstocking. Amazon is definitely could be a huge mistake, especially overbuying. They just
Right.
without any proper management and like forecasting.
And by the
That's
way, in that way, we also help our customers a lot, because when we underwrite your product, when we underwrite your purchase and give you funding, we're going to check your profitability, your
uh
history, your inventory forecasting. If it doesn't make sense to us, we're going to tell you, hey, you're buying 50,000 units. We feel you're only going to sell 30. If you still believe in yourself, great, but we'll finance the 30. So that also gives you some kind of feedback to a lot of data and know-how that we have, and a lot of best practices that we use in the entire management of your chain of logistics, whether it's
right.
doing inspections, buying the right amount of inventory, splitting it to smaller orders. You don't always have to buy a lot just because your manufacturer is giving you a 4% discount. It's going to cost you a lot more somewhere else, maybe.
Right.
You still have to calculate all the parameters to find the most efficient order for your business.
Got it. And basically, my last question, you touched a little bit on it earlier, but like I wanted to elaborate a little more on it. I know your funding service is different than a lot of others out there. What is the exact differentiator that makes you different than others? Because there's a lot of companies out there, but I'm aware that yours is different. Yeah, you take a different approach that makes more sense. But I want you to, if you could elaborate to the people that will listen to it.
Of course, I'd love to. So our approach is that we're not a financial institution, a funder. We're more of a partner with you on that inventory. So in that way, we underwrite that specific product. We underwrite what you want to buy. We look at the history of that product, the competition, the profitability. We check all the parameters of the product itself, because the product is the only collateral we take. There's no personal guarantees, business loans. And then we actually give you the ability, you give us your PO, we approve the PO, and let's say we'll tell you, hey, we'll finance 70% of this PO. So now you, with confidence, can deploy the deposit of 30% to your manufacturer. We pay the difference directly to the manufacturer only on the day that he needs to be paid. So if there was a delay in the manufacturing, doesn't affect your financing. You don't have to do any repayments. You don't have any extra fees. Nothing happens. If you have payment terms with your manufacturer, he gave you net 30 or he gave you pay before it landed in the
In the
US,
US.
then we connect to that. So maybe you don't need 4 or 5 months of financing. You only need 3 months because you have some payment terms. First of all, the fact that the money is deployed on the exact days that it needs to be, that already creates huge efficiency. in the cost of the financing. Two, the repayment, the cash flow, the ROI. You have that term that you paid your manufacturer, now you shipped it, now you start selling it off 4 to 6 months, hopefully. But our repayments will connect exactly to your ROI from selling that product. So we don't charge you anything while it's being shipped. We usually do a grace period of 45 days to allow you to bring it into Amazon and start making the first sales. And then we do the repayments to match the sales rate. So if we bought together 8,000 units and historically we're selling 2,000 a month, we'll do 4 payments. So you know that you don't have any cash flow restraints, no payments along the way. Basically, you're almost getting consignment in some way because you're bringing in more inventory, and when you sell it, you pay it off. So this allows you really to sleep quietly, deal with the positive things of your business and not have to worry with the cash flow. And even if things happen along the way, or sales went down, there's a new competitor, we'll spread it out if needed. On the other hand, if you sold it faster, you'll pay it back faster and we'll finance the next inventory
Right.
deal. We're not here to just give you money to sit in the bank and for you to do whatever you want with it. We're connecting directly to the inventory and the ROI of that inventory. And as soon as a business finances and strengthens its cash flow on its inventory, that's 80-90% of their expenses. Once that's settled and you don't have to deal with it and you know that everything's connected and it just works, then all the rest makes it much easier.
Right. That's amazing because like I remember when I was a seller, I was very seasonal as well. Like I sold gift baskets for like the holiday season, Christmas, Hanukkah was my 80-90% of my revenue of the year. So I was gambling at that time, right? So I
Right.
borrowed or I took a loan of $400,000, $500,000, and I gambled on product and then I sold it. And for me, it was like, no, I can't sell it. The day Hanukkah was over, the day Christmas was over, my business was done. Meaning, say like whatever was left over on Amazon was garbage because it was perishable items, things like that. And this makes so much more sense because a lot of times we as sellers back then, we make sometimes radical decisions because we're desperate for the money, right? We're tight. We need to make payment. Okay, let me lower the rate of the product. Maybe I'll sell much faster, so I'll get money back. And I really love the way you guys set it up. It's like you pay for play, basically. Okay, you sold 2,000 units. You pay me now. You make a payment. You sold another 2,000. So you really work strategically to help them grow, not the other way around. I'm not a seller anymore, but definitely if I would be a seller, it would make a lot of sense to do that. Do you have any like special offer, like whoever listens to it, like our audience, and how to reach out?
Sure. First of all, the clients that we're looking for, you have to have history because that's what we're based on. So you need to be selling for at least a year, your product selling for at least 6 months. Ideally, you have at least $20,000 to $30,000 monthly revenue. Those are the type of sellers that we want because we're here to finance growth. We're not here to finance new products that you can do with small money on your own. Once your product's selling, we'll finance the growth unlimitedly, basically. And we have a special offer for your sellers if you want. Do you want me to show a QR code or
I'm sure you could do that.
do you see this?
Yep.
We're offering a free inspection. Basically, we'll pay for your inspection on the first order that you do with us. That way, because we believe that you have to do inspection before you send off your product. So, and if you scan this barcode, you can file an application for funding. You know, got nothing to lose. We'll give you our feedback on your product. It's sort of an audit in that way. If you're doing well, then we'll finance you and we can grow together and be your partner in growth. And you have this special offer for tactical clients that you will pay for your first inspection.
That's amazing. So thank you so much for being here with me. Thanks so much for explaining and educating sellers how to go about their financing and financing their inventory. I think this is super valuable and super important now, especially that we're going into Q4. So thanks for coming on.
Thanks, Efrain. It was great being here.